foreign travel is to get expensive from July. This is because tax collected at source is set to jump from 5 to 20%. Not only foreign packages, but 20% TCS rule will also apply to credit cards on international transactions. Here to provide us with a detailed explanation is Mohit Kabra, Group CFO at MakeMyTrip. Welcome, Mohit. Please tell us how much extra will travelers be paying now?
Thanks for having me. Looks like with the new rules coming in, travelers will have to initially fork out about 20% extra while making their travel bookings. Although this would kind of be reflected as credit in their tax returns in the Form 26AS, so it can be claimed back. So it's more an upfront kind of paying out of an additional amount, but not necessarily an additional cost.
Okay, you said that it can be claimed back, but do you see a dip in travel because of this move?
See, we had seen about 5% TCS getting levied a few years back, and we had seen a little bit of a dip coming through because of that. Because as this kind of a upfront charge comes in, for quite a few travelers, it becomes an issue in terms of the total amount to be forked out. So that kind of creates a dampening effect. And the other thing is, just in case if there is a kind of a gap in terms of how this TCS is collected by the various kind of players operating in the market, then it could also kind of result in shifting of bookings from one player to the other, depending upon where customer sees a better pricing. So that's the reason that we have seen a significant amount of loss of business from Indian kind of travel agents to probably the overseas travel agents.
Okay, very interesting, Mohit. As you are saying, because of this transition, but today we have heard about 20% TCS also apply to credit cards now. So, can you explain us what does it mean for foreign travelers? Can you explain its implications now?
Sure. This was one of the kind of requests that we had made out, saying that there used to be a rule under which FEMA LRS kind of rules were not applied on international credit cards, and that was kind of providing an escape route on various bookings as far as the TCS levy is concerned. Now that the new rule has come in, wherein this particular aspect has been omitted, TCS will be applicable irrespective of how the customer makes the payment, whether it is on their debit cards or on their credit cards. And therefore, it will be a consistent levy irrespective of the manner in which the customer is making the payment. So I think it really helps because until now, particularly when it comes to a lot of the global OTAs, customers used to be making their payments on them via international credit cards, and therefore, the TCS collection was kind of escaping attention. This will now be brought into the net. So it's been a long pressing demand from the Indian OTA industry, and it's good to see that this has been addressed.
So you are saying now there will be no difference whether I book my travel from domestic travel agent or through global travel agent. I will be paying 20% TCS on all upfront.
Yes, there's a slight difference over there, and that is what is kind of bothering us when it comes to booking with the domestic travel agent. So if you book on a domestic travel agent, the domestic travel agent has to collect the TCS right upfront because it's an INR transaction. Whereas if the customer books it on a global travel agent, then most likely because it's a forex transaction, he has to pay only the initial amount, and the TCS levy happens subsequently by his AD bank. So therefore, the customer sees a little bit of a price difference. Say, for instance, if you're booking a $100 equivalent kind of a overseas travel service, the customer would see an overall amount of $120 being collected by the domestic travel agent if he's booking on them, versus seeing only $100 being collected when he's booking with a global travel agent, because the remaining $20 would be subsequently collected by his credit card issuing bank. So it's just that with the upfront, it creates a little bit of a difference, when it kind of comes to book on Indian travel agents versus the overseas travel agents. So
Okay.
just hoping that if the RBI can come out with some clarification so that this upfront differentiation between the merchants, whether they are India based or overseas service providers, this can be avoided, because otherwise this can lead to shift of business from the Indian travel agents to the overseas travel agents.
Okay, you are saying that it's just that the global players might be showing it at the time of checkout, but domestic travel agents are showing it upfront. So travelers might be lured to global travel agencies, but end of the day, it's the same costing for both of them.
Absolutely. Absolutely. It's just that, that the TCS levy kind of comes in later in case of, probably booking with the overseas travel agents. And therefore, that might create a little bit of a, buying behavior shift initially, from the customer side. But we
Also,
hope we
Mohit, yeah.
will to address that.
Yeah. Also, Mohit, want to understand, will the cost be different if I book hotels and flights directly and not through any travel portal, or say from domestic? You have already explained from domestic or global travel agent, but explain, will it be different when I do it directly and not through the agent?
It won't be different. The only thing is, the TCS levy will not have an upfront, like I mentioned, and in such cases, it will be collected subsequently by the bank which has issued the card to the customer or to you. So therefore, while upfront you might kind of see in the same example about $100 being kind of paid by you, $20 would subsequently be collected by the card issuing bank and charged on the card statement. So it's just a question of having to pay it upfront versus having to pay it later.
Correct. So, Mohit, please tell us how to book smartly to save better now.
Book now. Although,
Before
like I
July 1st.
Yeah. Although, like I said, it's not really an additional charge. It's just a cash flow issue. I think it's important to educate the customers that, it's going to come in as a credit almost kind of, immediately in their respective quarterly, returns or on the 26 years platform. They can see the credit coming in and they can avail that credit. And they can accordingly kind of, adjust it against their advance tax payments. And therefore, it is not really an additional cost. It's just an upfront amount to be paid, which can be recovered via the tax credits.
Right. And have you seen any surge because of this? Because it's applicable from July 1st, so people rushing and travel, booking more now?
Not necessarily. See, the other thing is, international travel overall has been a little subdued because of, certain capacity constraints. And therefore, probably the surge hasn't come on this one. But like I said, it is more about educating that it's not going to be an additional cost. It's going to be a cash.
Right. Also, one question comes to mind, will there be any saving if I book my travel from India and not from outside India? Because in that case, I will be making payment in Indian rupees only. So, will it make any difference?
Not really. See, that's the whole thing, that if you kind of make the booking in India, you're still going to pay TCS. But if you're going to go and kind of make the booking overseas and pay it via an Indian credit card, it's still going to kind of attract the TCS levy. It's just that it will come in a little later. So the timing might be a little different, but the overall payout will be the same.
Right. Clearly, foreign travel will incur greater expenses from 1st July. So, if you are planning to go abroad, do take into consideration these factors before booking your next trip. Thank you, Mohit, for taking the time to explain everything in detail to us. Thank you once again.
Thanks for having me. Bye.
If you like the video, do like, comment, share and subscribe.